The panel contains Guido, Buehler, Payal, Shah, Charles Morris, and Wilhelm Buehler, and it is led by Mark Mueller-Eberstein, who is really, think about Mark as the chief connecting officer of the crypto world, right? He's been connecting business leaders in IT for over 2 decades. He's an investor, keynote speaker, best-selling author in 12 languages, digital transformation for blockchain, cryptocurrencies, IoT, AI, and cloud computing. Please welcome Mark and his panel.
Thank you, Eric, for the warm welcome. And this year, you forgot, I'm also, I think, the only DeLorean repair shop north of California. Look at that. So if you're into DeLoreans, good topic. Having said that, so first, thanks for the CfC team to really put together a fabulous event again with fantastic speakers today that are representing what I, as an investor, personally extremely interested in. So I'm getting to use all this time to ask the questions I want to ask. In addition to that, though, the date today is a really important day in the crypto space. Actually, a day plus one. Anybody know what happened 13 years and 1 day ago? The very first Bitcoin transaction between Satoshi and Hal Finney. And if you think how much in 13 years we have come from one transaction to a complete financial system that spans the global environment, I think it's just fantastic and fascinating. And with me today, we have the representatives from all of the spectrum that as an investor, I want to know about. Let's start on the left side, the sponsor of our evening yesterday. Guido, why don't you do a quick introduction about you, your organization, and then we'll drill down into the details of all my questions. And we have a couple of minutes aside at the end. And if you don't use them, I use them for questions. Go ahead.
Okay, thanks very much. My name is Guido Buehler. I'm the founder and CEO of SEBA Bank, a fully regulated, holistic licensed bank, and we also have a securities license. Why did we found SEBA? Because we realized with blockchain, it has 4 attributes, and with these 4 attributes, it's going to redefine the roles and responsibilities in the financial market, and this technology will be definitively a core part of the financial industry going forward.
Hi, pleasure to be here. My name is Payal Shah. I work at the CME Group and I lead their crypto product development. So as part of my role, I create new products within the crypto ecosystem. That has included over the past 5-6 years, Bitcoin reference rates, Ether reference rates, Bitcoin futures and options, and similar with Ether. And for us, it's really creating new products, new and innovative products, to meet the needs of our clients in a way that meets their needs. So yeah, delighted to be here.
Hello, I'm Charles Morris. I go by Chuck. I'm a senior quantitative trader at Strix Leviathan, which is an asset management company. Our main vehicle, the Nest Fund, is a systematic cryptocurrency hedge fund that's focused on delivering better risk-free, better risk reward returns relative to sort of buy and hold cryptocurrency strategies. So that's kind of my story.
Hi, my name is Wilhelm. I go by Bill. I'm responsible for the trading operations at BitMEX Group, the cryptocurrency. We've got 2 trading entities, effectively. We've got a company called Arrakis Capital, where we basically manage the surplus cash flow of the firm, which we invest in crypto, various different risk tolerances. And as well, when we launch new products, we are usually the first market maker / liquidity provider on new products that we're bringing. And then we've also got a company called BitMEX Link, which is our new regulated brokerage arm in Switzerland, where we're offering clients a possibility to purchase crypto with a full fiat on-off capability.
So a really great representation here, globally as well as from the background perspective. And we talked about risk, but how do I, as an investor, the key thing is I do not want to lose money. So how do I manage risk? How do I think about risk structurally? Chuck, why don't you think about set the stage a little bit of what kind of risks do we have to think about as investors?
Sure. There's a pretty big set of risks that we at Strix think about sort of regularly in an effort to protect firm capital, protect LP capital. The first risk, which is sort of an obvious risk, and it's one that Bill is probably very familiar with, would be trading risk. This is mostly sort of price volatility, price discovery type risk. A second important risk that we deal with is counterparty risk. We keep assets in various accounts on various exchanges. You have to make sure that the counterparties are behaving appropriately so you don't lose the money on those exchanges. A third risk would be like a security risk. Protect your keys. Everyone in crypto knows this. A fourth risk would be a smart contract risk. In the DeFi space, you have to make sure that your smart contracts, if you're going to have capital in them, have been properly audited and sort of tested and vetted. Another risk would be technological risk. We think about this, at least trading-wise, I think about this in terms of whether the exchange partner where I'm trying to either liquidate or buy a position is going to be available to me when I need to, which is kind of an interesting aspect in crypto. This doesn't happen typically in traditional markets. And the CME is never down. The NYC is very rarely down. This is not true on crypto exchanges. And I would say kind of the final big kind of granddaddy risk of them all would be the government and regulatory risk associated with the space. And this is a very big one for institutions. So that's just kind of a broad outline of the risks that we think about.
Some of them are definitely very crypto-specific risks, but risk management for investments is not really new. And I think it would be great if you had somebody who might work in that space for like 180 years by now, giving us an overview. Not you personally, I think, but maybe you can tell us a little bit more how risk is managed professionally for a lot of time and what we can learn from that.
Yeah, I mean, sure. As you mentioned, CME has been around for 180 years. We started way back when as a butter and eggs exchange, and we've constantly innovated. So in kind of 1980s, we were the first to bring FX futures to market. We followed that with equity futures. And now as our clients are getting more and more into the crypto space, they need risk management solutions for this new asset class. And really, that was our calling. As our clients needed a way to manage risk for price discovery, we started out initially with the crypto reference rates and then launching a cash-settled regulated future that settles to an index. So if I may, let me just unpack that a little bit. And you were very kind to mention the risks, but what a cash-settled index, a cash-settled future. So cash-settled, you don't have to deal with hackings, wallets, custody, insurance, all of those things that are barriers to entry for the average institutional investor or retail investor. We kind of take that away.
Okay.
It's regulated, so that time-tested mechanisms and conventions that we have on the exchange, we are the counterparty to every trade. Everything is cleared. We have a large FCM network, so there isn't any counterparty risk.
So I don't have to worry about getting the cash. I still have to worry about the volatility risks, or is it an opportunity? Bill, I think you guys are seeing it a little bit different, right?
Well, my views, I think, with my background, I always was a fan of volatility, and I think we have to embrace volatility and try to utilize it in the best possible ways. And what we do on the Iraqi side depends on the strategies and the portfolios that we're running. We'll have certain of our positions which we'll protect with collars. So where we'll try to do zero-cost collars to basically make sure that we've got the downside protected. But we also will embrace a downside where we might do synthetic mining, where we'll be selling out of the money short-dated puts just to collect premium, to just basically receive premium, but also go like, if we get long at these levels, we're happy to own the coin at these levels. So these are the ways that we look at risk. And I think everyone here in this room, if you're looking at existing spot prices, quite certain that we'll be seeing new highs in Bitcoin and all the other major coins. And if I would have said...
When do we see the next?
Well, that's a different question. That's a different question. But if I would have said to you in November, relax, yeah? In 2 months' time, you'll be able to buy Bitcoin at 40,000. You would have cut my hand off. And I think that's where you, as an investor, depending on your long-term horizon, have to understand this is a high volatile product that you're trading, and you have to try to play the market accordingly to the volatilities and the price movements. You know, maybe not rush in at 70,000, start buying like crazy, but maybe reduce your exposure because there will be other entry points. I don't think we'll be seeing again 12,000 or 15,000, don't get me wrong, but try to play the market accordingly.
I mean, for amateurs like me, those are interesting things. But if you look at the latest data, I think chain analysis came out, and I think with the Messari report just came out in the DeFi space, makes it very clear that we are seeing institutions going into that space much, much stronger than I would say most people have even expected 3 years ago. Guido, I think from where you are sitting, how is that true, or how do I overestimate that?
Yeah, that's correct. We see more and more institutional interest, and they are used to institutional capabilities like CME. And the crypto infrastructure was bottom up, and it was also driven for retail. And the expectation for institutions are different because many of those are managing third-party money and therefore have a lot of responsibility and accountability for that. But when it comes also to risk, it's the investment risk. And what we have found out, and that also what we have elaborated very, very clearly, is education. And so as part of SEBA, we also have SEBA-versity. And we have educated hundreds of relationship managers, of money managers, to make them fit to talk about this concept. Even if this institution is pro or contra, at least they know what they're talking about. But I'm always saying people that have really taken time to try to understand what blockchain and crypto is has become a fan. I don't know one single person that was averse to it. So by dedication, people get pro. And secondly, it's about making these institutions fit to provide investment advice. And so also we have created an official regulated buy-side research capability. Because now these money managers can lean on this report to make their own conclusions. And then you go into the investment. There are various ways to invest. And if it goes up, everybody is happy. If it goes down, you may have a lawyer calling you, and all these people have to be prepared to show evidence why they concluded on their investment strategies.
So traditional money managers, they organize their daily life around the Wall Street opening hours, right? So crypto is very, very different. And I think we have a lot of family offices here, people that have lives outside of a 24/7 trading cycle. How can they participate in this market in a professional manner, managing the risks responsibly? What would you say? How would they start?
Well, we have 24/7, 365-day per year capability. And it's interesting what you're saying is over the weekend we see many times a lot of action. And you need to have access, and you also need to have people on the ground. It's not good enough to have a machine running and executing. Sometimes people, when it comes to a level, they want to have somebody on the other side to talk, to create comfort in their decision making. And then we have a lot of leveraged investment finance, and maybe traditional and maybe particularly also family office are used, that margin calls and executions are made on. You can have the private banking model, where there's a lot of facilitation and comfort setting until you're executed. And there is the investment banking model. And when you run 24/7, 365, this is very strict and very clear. And you need to be there to have the conversation.
Yeah, I guess we're slightly different. Being tied to an exchange that is, so old, 180 years, as you said. We actually offer 23/5, so we're open Chicago Sunday night through to Friday evening. And often, you often hear about the CME gap, right? Our markets are closed on the weekend. What happens when the price of spot moves, but the CME is closed? So I guess in response to that, you are able to trade at the weekend. You can do off-exchange transactions that can be agreed and arranged offline, and then when the exchange is back on, they are reported. But the other thing that's quite important is that our clients, our asset managers, pension funds, we have miners. Some of those actually prefer the taking the Friday evening off. And so it's a step change, right? As the entire market moves, we will hope to meet that need. But right now, that 23, we need that weekend to service all our other asset classes. We need that downtime. And we have, as you mentioned, we have price limits. So if the market does move, we actually have checks and balances in place that prevent auto liquidations. We don't use that system of auto liquidations. We don't take haircuts to fund a guarantee pool. So we have all of these checks and balances that, although we're not open 24 hours, we can still maintain a very efficient futures model.
It's kind of an interesting question in these markets, and it kind of goes back to like Michael Lewis and Flash Boys, where he complains a little bit about the high frequency trading and how everything is fast all the time. And you're talking about 24 hours, 7 days a week, 365 days a year, and yeah, you'll see very weird action on the weekends because big institutions are not trading on the weekends, and I think it's a very interesting question, just philosophically, whether we need weekend trading and whether 24/7, 7 days a week, 365 days a year is good trading. You're never going to shut it down. It's going to exist and it's going to happen. But I just think it's kind of an interesting question.
It depends who you talk to. A good friend of mine runs during the day $800 million bond fund, and it's really, really boring. So in the evening he goes and does his DeFi trading. So
it's good for him.
Exactly.
Yes.
And I think he's probably at BitMEX, right?
He could be, yes. I mean, again, I think the genie's out of the bottle. We will not get it back in, so we have to accept it's going to be there 24/7, 365 days. And I think if you embrace it, there are these opportunities, because if you look this year at or last year rather, at all these little flash crashes we had, they were all usually on these weekends, because of course the institutional clients are not there, or potentially you have got problems getting capital onto the exchange because the banks are closed. So if you're then willing to say, wait a minute, I'm happy to run trailing stops in the market where basically I'm happy to buy 10% or 50% down, you might have that mini flash crash, and then you just basically, if my option or basically my order gets triggered, sell it 5 or 7% higher again. There are opportunities. I think it's just like, how do you want to play it, and are you willing to embrace it?
So then there are lots of opportunities, but on the other hand, you have, as we said, more institutional players getting into this space, and they have obligations to their shareholders. I'll see somebody from Hive over there, the CFO of Hive was in Seattle a couple of weeks ago, and we had lunch together, and we talked about how do we make sure as a publicly traded company, you are actually fulfilling your compliance obligation, like Sarbanes-Oxley, for example. You need to sign every quarter and making sure you're not ending up in an orange jumpsuit by not reporting the numbers correctly. How do institutional players that want to play by the rules, that are ensuring for their stockholders, shareholders, executives to stay on the right side of the line, to making sure that they are tracking and reporting accordingly?
I'll offer a sort of 2-cent anecdote. It's very challenging at Strix, anyway, to even have any kind of limited access to some of these venues that are more restricted, that are not playing by the rules, that are not within the purview of, say, the American government, which is where we're operating. We are, a licensed operator in the United States. So we can't get onto these exchanges unless we use some sort of backdoor prime brokerage relationship. So in a way, it's, the laws are sort of, the regulators, or the fear of the regulators are keeping you in check to some degree. I mean, I think some of these exchanges are very afraid of somebody like us putting money on them and them being subject to, the power of the U.S. government coming down on them or something.
I'd just like to touch on that regulation point that you mentioned. For us, I think regulation is key. It's a feature, it's not a bug. As long as that regulation enables innovation, it doesn't stifle growth. So for us, being able to attract investors, whether that's family offices, hedge funds, pension funds, I think that they are able to trade our product because of that regulation. And we look forward to playing within those rails because it allows, even at a first step, guys to get involved. And one of the things that we've seen, from when we launched Bitcoin futures, the standard contract, 4 years ago, back in 2017, that conversation has really changed from what is crypto, from these large banks, to how do I get in? How can we use a regulated venue to actually access the market? So I think it's been a step change, probably something that you've said as well.
I agree. That sometimes in the conversation is regulation is bad, even in the traditional guys, right? And in Switzerland, the regulatory framework is principle-based and is technology agnostic. And when we had the idea of setting up a crypto bank at that time, we had to really show that this technology has feature that protects bad players. And I think it's in the interest for everyone that we have an environment that protects everyone that has money into that, that it's safe, right? I mean, there are protocols that we all are very keen that if you have a transaction, you can find it. It's not, you lose an NFT and there is no audit trail anymore and people don't. So it's embedded in the blockchain community. And with the old technology, that framework was more governance-based around institutions. And I think the nice thing is we can now put these rules into smart contracts and in technology. And there is a combination that creates a win-win situation. Rather than regulation is bad and it slows us down, it can actually bring regulation forward and we create a more distributed world with more empowerment of the players inside in there and have a safer environment. So it's not a trade-off, it's a win-win constellation, but we have to think smarter about it and we have to have probably a more holistic view rather than just me and my interests now. What about the interests of other stakeholders and are they protected? Because we also talked about stablecoin. It's great to create anything on blockchain, but it's not used by many people. The value of blockchain is zero, right? And so we have to think about everyone incorporated in that.
I just want to quick interject before we continue, because trading 24/7, 365 days a year doesn't mean that you're moving in an unregulated environment or that you're supporting unregulated trading. I think we all agree here that the way forward for exchanges, for trading counterparties is we all want to be somewhere under a regulated environment to create a playing field that will ensure the customer is safe and the institution is safe, that there are not any issues that we've been seeing in the past. So I think we have to keep that in mind. Everyone wants this one going forward and having a regulated environment. But we also have to remember this is an innovative space. And I think we have to agree that this innovative space will stay at 24/7, 365 days a year. I can understand that for someone like CME on the institutional side, that is not easy to meet and things will not go there. And there's a reason why that is the case. But I still think there's room for everyone in this market to basically be servicing these different needs, so long we stick to what we all, I think, want to achieve, to make sure that whoever comes into these markets is happy and is feeling comfortable that the way he's trading and what's happening around him, he's safe and secure.
Oh, 100%. And I think a lot of the traders trade a CME product, a BitMEX product, the spot markets, and there's a really nice price formation, price arbitrage. That ecosystem is growing. And to see the offsets amongst the different venues, let's say, I think that's really beneficial for us going forward.
So it feels like the regulation that is in place and has been established over the last 5 years really allows centralized entities to create an environment where I, as an investor, don't have to be worried that I have to wear orange for the rest of my life. So that's great. But what about DeFi? There is really no hotline to call at Uniswap or SushiSwap, right, to making sure that all of those things are compliant. How do your institutional investors think about it?
Yeah, absolutely. And it's true for many other players that not even in the blockchain space, right? The digital banks or proposition if you have a problem, you want to have a response. And service repair creates 84% of customer loyalty if you want to have a sustainable proposition. But for instance, on DeFi, it's very interesting now with AV Arc, right? So maybe 12 months ago, people thought it's impossible that a regulated entity as ourselves can work with a DeFi crypto lending platform. And so we thought, put our heads together, and now we create this win-win constellation. And as part of that, it's very clear that we have to understand how we work with AV Arc. And if our clients have a problem, they can call us, and it's our service and it's our accountability to get things sorted out. However, if we have various ways to create yields, and every channel has a different risk profile, is it infrastructure or counterparty, and people have to be educated about that, and it's their decision which rail they want to take.
Getting back to it, most of us investors do not only invest in crypto. We have traditional assets as well, or even more than that. And why should I invest in crypto and have potential risk exposure to the rest of my wealth? How do I go about it step by step to making sure that I'm not exposing the rest of my assets?
I'm not sure what you mean by exposing the rest of your assets.
So if I'm investing in crypto, I'm not compliant. The government, whoever it is, comes after me.
Got it.
I'm not only with my Coinbase account, but there is a bunch of other things that the government might be able to go after.
Right. I mean, you must be a very, very wealthy, powerful person, and they can extract a lot of value from you that they couldn't extract from me. I would just say, in general, that it's kind of in a weird place where they're trying to get people involved more generally in crypto and institutions. I saw Bill Miller on Wall Street Week, and he was talking about how he owned 50% of his personal assets in Bitcoin, and he was recommending 1% for the average investor. And I would say, 1% allocation to any asset is a poor allocation and not a well conceived of idea. So 5 to 10% of any individual's assets in crypto is probably a good place to start. Bitcoin, Ethereum, rotating, whatever. I don't know. I don't see the risk in owning some percent like that in the asset.
I think my views, I think you have got the possibility in the sense of, okay, do you want to own the asset directly, or do you go investing via a regulated asset manager or via regulated funds? So you've got these options. Of course, you can go down this route. But I think what Guido had mentioned earlier about basically DeFi, I think it's great that we are finally getting to the space that we are offering regulated DeFi products and giving clients the access to it. And we at BitMEX also running different investments in DeFi in sense of, is it out of our unregulated entity or is it out of the regulated entity, where, of course, we've got different risk profiles. But we always have to keep in mind, I think DeFi would not be where it is today if we would have basically sat down 3 or 4 years ago and said, wait a minute, let's first try to create a regulatory framework where everyone can play with, and then we start investing and building it up. So again, I think there it is the innovation that has pushed it, and suddenly the established world said, whoa, there's a product that we want to participate in. Okay, now let's try to create an infrastructure around it that we can benefit and start utilizing. And I think that's a great way to look forward.
Yeah, it's the evolution, right?
Yeah.
That starts with the retail and moves to institutions. And DeFi for us is extremely interesting in the same way as the other top 10, top 20 cryptos are. So, we've tackled Bitcoin and Ether. We would love to see where we can go next. But for us, our futures settle to an index, and that index is made up of a number of constituent spot markets. So we take the prices from those spot exchanges. So I think what we need is twofold. We need that growth in the underlying spot markets such that we can create an index to which our futures can then settle. And that the idea of converging to an index is the concept that we all know from S&P futures and oil futures. But that convergence is key, and having that index to do away with kind of the reliance on any one index or flash crashes. Everything that we see in the spot markets, that's what we're trying to protect against. So it's growth in that underlying spot markets before we can do anything further, and a little bit of regulatory certainty as to where do we send the application? Do we send it to the CFTC? Do we send it to the SEC? So for us, it's tackling those two things.
Let me take the last couple of sections. You mentioned future and innovation a couple of times. What are the key things you hear from your customers that need to happen? Is it fractionalization of assets? What are the key innovations they would like to see over the next few years from you?
It's our clients or many institutional clients, so it's more supply driven. We have to educate, and I talked about this. Me personally, for the upcoming years, I think it's the combination of metaverse, NFT, lending, and banking.
Okay. One addition, last word.
I mean, it's exciting, right? It's hugely exciting. We launched Bitcoin futures 4 years ago when we were doing 1,000 contracts a day. We're now doing 10,000. In the micro space, we're doing 30,000. So I think for us, it's just meeting that risk management need and creating smaller size contracts like a 0.1. So just making sure that we evolve,
flexible,
right?
and keeping the innovation. Thank you. Thank you so much. This was super enlightening for me, Guido, Payal, Chuck, and Bill. Thank you so much for being here with me today and at the CFC. Thank you very, very much. Really appreciate it. Thank you.